You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block, everyone's favorite bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as from the ever-expanding, ever-compelling Options Insider Radio Network. At least we like to think so. Of course, 13 programs on said network, including the Option Block and our latest edition, Options Oddities, all sorts of fun stuff to parse down there. If you're a financial advisor, you can get into the advisor's option. If you're a futures options guy, hey, the long and short of futures options may be for you, or indeed the futures options roundtable. You name an options-related topic, we got something on the network for you. And if we don't, hey, let us know. We'd love to hear from you. No shortage of ways for you guys to get your questions, your comments, your show suggestions to us, including surfing on over to the mothership, theoptionsinsider.com. Leave us a website comment there or use the feedback form. That's all built in there as well. You can find us on social media, twitter.com/options, facebook.com/theoptionsinsider, and of course, find us the old-fashioned way, email at questions@theoptionsinsider.com. Just be sure to put whatever show you're referring to in the subject line so we know how to direct it. And of course, you can find all of that baked into our mobile app available for iOS, Android, and the Fire OS. No shortage of ways for you guys to listen to the shows and to make your voices heard. We'd love to hear from you guys. I always forget Stock Twits. People mention that to me a lot. Stock Twits as well. We're on there at, I believe, Options Insider. So yes, no shortage of ways for you guys to make your voices heard, including our friends over there at Stock Twits. Everybody has equal opportunity to reach out. All right, and joining me on the old program today, starting off with the man beaming in from the lovely, the scenic, the scintillating St. Charles, Illinois. He is Uncle Mike Tosaw from RCM Wealth Advisors. Uncle Mike, welcome to the program. Not a heck of a lot really to talk about today, huh?
Ever scenic, ever scintilizing.
Oh, scintilizing.
Lots of fruit.
I like it, scintilizing. We're making up new words. It's a new word show today.
I just heard your word. I'm going by, you're the human thesaurus.
I go with scintillating, but we can go scintilizing. It's kind of like tantalizing and scintilizing put together. Maybe, or scintillating, I'm saying it. Maybe like a steak would be scintilizing. How about that?
There we go.
I like it. And also joining us, beaming in from the great international HQ of the pit, Mr. Mark Sebastian, the major domo over there at OptionPit.com. How you like that, sir?
I
bumped you up
upgraded
there.
to Major Domo.
See,
wow.
You're complaining. Your complaints have been heard, sir.
Alex goes away for a couple of weeks, and all of a sudden I'm the major domo. I love it.
Well, we'll keep Viceroy for him, but you could be the major domo. Perhaps Prussian General could also be one of your titles.
Oh, I like that. How about I could be like the Commodore of the
Commodore. I like that. That's a good one.
That's good.
Archduke.
I do like that one.
The Archduke.
It's better than greasy meatball sandwich.
We had that discussion. If you missed Volatility Views, folks, I was on with Jared, and Jared gets the major domo of research, Captain Brilliant, smartest guy I've ever met in my life. And then he's like, and the greasy meatball, Mark Sebastian. I was like, what? No, I'm just kidding, folks.
In my defense, I don't think I used all of those superlatives, but he does get the major domo of research because I usually forget his title whenever he comes on. So
he's a good guy.
It's easier to just use that.
That's the title insert, major domo.
Yes, pretty much. If you listen to enough shows on the network here, listeners, you know a few of my catch-alls, and that's one of the ones I go to when the rest eludes me.
So anyway, I was downtown most of the day, and I'm actually beaming in to our remote headquarters in the Olmstedian town of Riverside, Illinois.
Yes, and as you reminded me many times, it's not a burb because you can take the L out there.
It's right.
Even though
Correct.
if it's outside the loop.
Even though it's a burb.
Even though it's outside the loop, it's a burb. North Michigan Ave, that's a burb to me.
Yeah, I get it. So.
All right, listeners, before we get you deep immersed in the local geographic trivia of Chicago, let's keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, listeners, welcome to the Trading Block. You know the dance by now. This is the portion of the program where we break down what's catching our eye in today's market activity. We're recording this, of course, on Monday, October 20th. You're hearing it on whatever day you choose to listen to it. Could be Tuesday, the 21st. It could be the 21st on the Tuesday in 2017. We don't care. It's up to you. Whenever you like to tune in, listen to the program, we encourage you to do just that. Of course, it was an interesting day on the old street today with it depended what kind of day it was, depending on what you trade and where you were looking. And even across the broad indices, it was a little bit of a mixed bag. The S&P, kind of the Goldilocks porridge of the bunch, up about just a hair shy of 1% or nearly 18 handles on the day. The Q's leading the charge, so if you're playing out in tech land, you were pretty happy today, up about 1.6% on the day today. And the Dow, a bit of a laggard, pretty much just a hair shy of unched on the day. So it really depends if you're looking at the broad stuff, if you're looking at some of the more targeted stuff, or perhaps the tech stuff, how you felt about today's activity. Of course, after last week's dramatic surges and movements in the markets, VIX spiking as high, the VIX cash, I should say, spiking as high as up as 31. We saw it come off a bit towards the end of last week and coming off more again today. Down a little over 3 handles, 3.3 handles or so today to get back into the high teens. Some may say a more sane realm. Of course, it isn't outside the realm of sanity when 10-day realize suddenly spiked up into the 20 range that we would see a VIX into the 20 handle range. So a lot to parse. Of course, there is some little bitty fruit company here announcing something after the bell. So perhaps Uncle Mike, in deference to that, we shall start with you today, sir.
Hey, little Biddle.
Yeah, that's a great show, by the way.
The cat and the fiddle. Longo jumped over the mock turtleneck.
Yes, I am full of the rhymes
The
today.
ginormous Mike Tosaw laughed at such a sight, and the greasy meatball ran away with the hoagie roll. Well, ran away with the lobster.
There we go.
There you go.
Save us, Uncle Mike. Save us, please.
Oh, man, I went down a road I really shouldn't have gone down. But anyway, yeah, today was an exciting day. Just waiting with bated breath for the earnings announcement on Apple. I'm long stock, long put going into it. So don't really have too exciting of a position. I was thinking about doing a little bit of a back spread in addition to this, but I have a long put at the 92 level, so if we do go down in a major way, and when I say major, I mean like down to the 80s or the 70s, we're okay, but we'll see where this goes. I'm long stock, long put for the time being, and I would like to just see where we're at. We'll start getting creative in terms of selling more premium in the days to come. I wish I had a really fancy position like I have had in the past for the listeners going into earnings announcements, but I feel right now, long stock, long put's the way to go.
I think it was you today, Uncle Mike, slinging that 25 lot of the OC double weeklies That's right up your alley, I believe, and that sounds like a trade you were certainly on. But it was fun to kind of watch the premium kind of creep in today out there in Apple. We were kind of tracking it throughout the day. What was looking at it. It was vacillating around the 99 to 100 range. Of course, closing just a tick under 100, like 99.80 or so, and seeing a little bit of juice continually creep into that weekly 99 to 100 range straddle. Started off the day somewhere around the $4 range, ending right around the 4.60 range. So certainly getting a little bit of juice, as you might expect. And we are, of course, waiting, as Uncle Mike said, with bated breath for that big announcement, and everyone kind of playing the wait-and-see game. Uncle Mike playing it a little safer, a little normal, with just long stock, long puts. I was hoping for some crazy 3-by-1 ratio iron condor swap, but long stock, long put. We'll do that too. All right. Mr. Sebastian, what caught your eye in today's activity?
Yeah, I did notice that with Apple. Got a 60-cent move and a $4 straddle is a massive.
Yeah, that's not insignificant.
Increase in vol. that was a serious run-up in vol for that straddle. Shockingly big. I was looking at this morning like, meh, and then now I was just blown away that they ran the vol up that much. So that's a big deal. Then the other piece was this IBM news this morning. IBM got absolutely taken to the woodshed. It was down almost near into the 165s for a minute. Warren Buffett was like breaking his cane. He was so angry for a little bit, but bounced back down 7% from almost down 10% at one point. The vol barely moving. It was only off like a point on the day. So that is one that is starting to look really appetizing. A trade we kind of like as a way of acquiring the name. This is a Tosaw special. I like a long-term kind of bear 1x2 put spread to try and take advantage of maybe the stock easing a little lower, but if it goes low enough, picking a spot where I could get in, or maybe just the outright put sale. The 165 puts at $8 or the 160 puts at $6.20 in April both look kind of interesting. But maybe the trade I kind of like is long the 60s, short the 55s and 50s as a way of potentially getting into the name.
April. You don't usually play that far out in the curve. What drew your eye to April?
More of a just that's where you can get the value. If you're going to do straight puts in terms of a straight put sale, that's where you're going to get kind of the best pricing. I'd be interested in IBM below like 155. So that makes the 160s at $6 kind of interesting. The 1x2 spread, that's kind of a nearer term play and makes a lot more sense. The other piece, just the absolute VIX implosion and the drubbing of volatility. And, Mark, you bring up a good point, realized volatility in the 20s. I was doing some math, and average true range leading into today was 28 handles a day, which converted to a volatility comes out to about right around 25%. So the idea that vol is needs to come in when was our kind of slowest day we've had in terms of an intraday range and a day over day range in probably 2 weeks, and it was still almost 1%. So the idea that and we did manage to close just below that 200-day moving average that everybody and their brother is talking about. I'm going to be real interested to see if that fails or not. There is some talk that that's a level that there will be some selling pressure at. If that's the case, then watch 1906 for a level to see if the market bounces off of that. Apple may help, but I'm not sure that. I'm just not so sure about that. I think we at least have to have some sort of pressure off of that level. That's my thoughts.
But it's interesting thought. A couple interesting thoughts there. Really, first off about the IBM. You're right. It wasn't. The near-term stuff didn't really get much of a pop, maybe because they kind of front-loaded it over the weekend, going in saying, hey, there's going to be some big announcement from us coming up on Monday, so maybe it wasn't the big screaming shock that a lot of people perhaps assume. So maybe that's why we didn't get as much of a pop, particularly in the near options. And you got to go a little bit farther out to April to get anything of any real relevance. And of course, the VIX notion. I can understand people were drubbing about selling it when it got up north of 30 because that makes a hell of a lot of sense. That's a crazy town level. But now when people are continuing to beat that drum now that we've dropped into the low 20s and the high teens range, this level, at least for the near term right now, makes a lot more sense to me. Of course, if we revert back to the old days of 2 weeks ago where we were doing 5 or 6% actual realized vol, then sure, sell the hell out of it. But if we're going to hang around here in this perhaps new environment of mid to high teens to 20% realized vol, or as you were saying, average true range of 25% for a little while, then I'm sure as hell not going to be blasting out a lot of stuff here.
No, I'm with you. I think it makes some sense to, find a few levels here and there, but the idea that it makes sense to just go palms out here is laughable.
It's surprising that people are still kind of beating that drum. I guess maybe they just got on it when the VIX hit 30 and they can't get off now for whatever reason. They're too addicted. Of course, there are some other names making some news here in the after hours. We're also awaiting. It's ironic now, Apple and the stealth Apple both reporting on the same day, of course. Chipotle actually no longer the stealth. It's, at least from a price perspective, orders of magnitude more expensive than Apple. Of course, Apple hovering right around $100, Chipotle at $6.50 right now. Also unched right now in the after hours, so we're still playing the wait and see game there as well. Another interesting topic I thought to bring up here on the show today is that it was this weekend, of course, the 19th. It was the 27th anniversary of the 1987 crash, and that gets a lot of play in the broad financial media. But I don't think people who are maybe latecomers, newcomers to the options market realize how important, how transformative that event was from an options perspective, and certainly from a volatility perspective. The modern options industry that we know today was really born on that day, not just in the number of firms that got shaken out in that and kind of the surviving ones grew into the large options monoliths that we know today, but also in some of the fundamental aspects that we now just accept as the norm in options trading, like volatility skew. That was pretty much born back in 1987. People said, hey, you know what? These puts aren't really doing what we thought they would do. And that led to all the new modeling and risk graphing and volatility graphing, and the concept of skew was kind of born out of that. And so there's so many transformative elements out there that make this a very, very uniquely option story, as well as the lingering blame that the crash somehow started. I've heard different variations of either the S&P futures pit on the CME or the SPX pit on the SIBO. Whichever way you lean toward it, the blame has been laid many times at the foot of those crazy guys out in Chicago. But still an interesting event, and certainly, Mark, I don't think all the stuff you've done with VIX probably wouldn't exist, and then certainly wouldn't be as interesting to talk about if it was no 1987 crash.
Oh, yeah, no, for sure. For sure. I mean, VIX, skew, things like that. There's been a lot of changes, and yeah, I mean, it really did. It really is a kind of a game changer for next week. So, next week, kind of a game changer. So that was really what made options what they are. So yeah, kind of a, it's been, the funny thing is how few people now are really involved in the industry that were even around in 87, right? It's all a bunch of retired guys now.
Yeah, that's why we need Alex back right now to talk about put this in some historical context, because he was actually down at the SIBO that day. And so to put it in, I was, I think, 12. So yeah, I wasn't out there slinging any downside puts. But it's still an interesting idea. And I think a lot of people listening to this show may not know exactly how much of an option story the 87 crash really is. And of course, we eventually probably would have picked up on these concepts at some point anyway. There were myriad lesser crashes post 1987. Someone would have said, hey, these options ain't really performing as I thought. Perhaps there's something else at work. So it would have happened eventually, but it was so catastrophic in 87 that it kind of just catalyzed a lot of the thought and a lot of the analysis and a lot of the interest around that one event. And so much of what we know of today as standard from an options perspective really kicked off on that day. And speaking of kicking off, we're still waiting here for the big announcements from the big companies. So as we're waiting for those, we're going to keep on rolling right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, that funky tune means it is time once again for the Odd Block, the portion of the show where we break down and analyze and kind of scratch our chins over some of the more bizarre activity we're seeing out here in the old options markets. Going to kick things off with a newcomer to the Odd Block. This is Digital Realty Trust, Inc., ticker symbol DLR. Closing today, 65 and a quarter, roughly up about a little over 1%. So pretty much in line with what we saw in the general market movement today. This is the name that does about 1,000 contracts a day, so not bad from and options, and certainly from an odd block perspective, doing about 4.5x today, doing about 4,500 contracts. So a fairly robust day from a DLR perspective at the very least. And what caught our eye was essentially a big trade going up this morning, approximately 2,700 of the Nove 65 calls going up for $1.40. It's caught our eye for a couple of reasons. First off, as I mentioned, the ADV out here is not that much. So this already was almost 3 times the ADV. So that's going to pop on our scanners alone. And then, of course, this went up in one large block, went up through the bid. So that also caught our eye. Someone looking to really get done and do it aggressively and probably having to pay up a little bit to get it done in a relatively illiquid name. As the day has gone on, another 1,000 or so have piled in to the tune of 37.75 now going up on this strike on open interest of just a hair over 2,000 contracts. We also did see a block of stock going up earlier today as well of 108,000 shares. So that could have gone up tied with the options here, giving a little bit of a different context to these. Again, 108,000. I haven't done the deltas on here, but not enough to hedge the whole thing. So not 1-to-1, but still hedging at least a portion of it here in the underlying. Mr. Mark Sebastian, what's your take here on this pretty sizable block of call overwriting going on here, and everyone's favorite name, DLR?
DLR. You know, it's one of those income production stocks. So it's got a dividend, and it's got a big dividend, and it's a yield play, which makes tons of sense in these names. So it's just somebody that's owning it. If it goes up, great. Let's ride that. And really, what we want is the 83-cent dividend and this kind of monthly or semi-monthly income from call shorting.
This has kind of been thematic in the odd block quite a bit over the past few months as people going a little bit further afield, doing some interesting things. This guy riding a little bit longer term, essentially in the money calls now. They're at the money, slightly in the money calls here, and looking farther afield and doing some size when they could find it to try to find any real yield out there. It's a bit of a battle right now to find any decent yield in names that you actually want to trade. This guy, for whatever reason, having centered and focused on DLR, obviously probably an underlying holder, adding a little bit more to that underlying position today as well, and also carving out a good chunk of yield, clearly piling on to the 2,000 already open on this strike, so maybe he's put a few on before. We'll keep an eye on this one. But again, another example of people kind of going a little bit farther afield these days to find some decent yield, and when they do, pounding quite a bit through that strike. 4,500 contracts, or about 4,000 total on that one trade. Substantial for a name that does just a hair under 1,000 contracts a day. Since we were talking tech earlier in the show, and we are eagerly awaiting the Apple results, Uncle Mike waiting quite literally with bated breath. Let's move on to another relevant name in the space. Well, maybe not relevant, but at least related. This is Yahoo. And Yahoo, of course, will go sans the Mark Sebastian yodel, I should say, for today. But they are, of course, reporting earnings tomorrow after the bell. Closing today about 39 and a quarter, up about 2.2% today. So not a bad day for Yahoo, catching a little bit of a lift off what's going on in the market, and a little bit of the love going tech's way with the NASDAQ rallying so hard. Yahoo, as you might imagine, is a fairly robust name. It does about almost 300,000 contracts a day, 285. Some of that obviously inflated by some of the recent activity we saw over the past week. So the ADV probably a little bit less than that in actuality, doing about 200,000 contracts today. And kind of surprise, given the activity today and the upside move we saw in Yahoo, no surprise really that we saw the activity out here in some calls. In particular, I'm going to scroll on down to the November expiration cycle for those of you playing the home game listeners. In particular, it was the Nov 39s going up for a $1.67, 8,400 times when we profiled them this morning. That's decent size to begin with. It went up in one block, which is a huge block for Yahoo, so that also caught our eye. We also saw some stock again going up, this time going up on 420,000 shares, and we do try to pick that out for you whenever we can, listeners, because it does change the tone of the trade a little bit. But if they are buying these calls on a ratio, again, this is paper buying for prices around $1.67, and of course a total more piled in after we saw that block go up. We saw 11,000 total going up on that strike today on open interest of just about 8,500 contracts. If they are buying, this could indeed be, of course, looking or specking for a big move here in the underlying. Of course, there is about 8,500 open on that strike too, so could have been a closing side of the trade as well. Could have been someone coming in, at least in that initial block, taking off what they had put on before, and the other 3,000 could have been just the piling in of the market, because there was a lot of activity going on in Yahoo today across a myriad of strikes, not just the Nov 39s, about nearly 7,000 of the Nov 40s also going up today, 2,800 of the Nov 41, 7,000 of the Nov 42. So it looks like maybe a spread there, Nov 40, 42. So a lot of activity out in Nov on the call side. So that other 3,000 could have easily been piling on from that as well. Mr. Sebastian, where do you fall here on this Yahoo call palooza? I think this guy's closing. I think this guy is specking hard on earnings tomorrow. What's your take here?
Yahoo!
That's what we were all
I'm
waiting
not
for.
sure. With the amount of volume on these trades, it's always kind of hard to figure out exactly what's going on. If the things match up that well, it could be a close. I'm not sure I would want to be carrying a bunch of stuff into earnings. It'll be interesting to hear about kind of what's going on with Alibaba on their end, so that'll make it an interesting play. But this is it's so difficult on these super active names to figure out exactly what they're doing, which is why unusual paper in Yahoo is hundreds of thousands of contracts, whereas unusual paper in DLR is 1,000, something like that. That's what's really makes understanding these things in relative terms so important. I'm seeing Apple up $1 right now.
Yeah, they beat estimates. Looks like they got 142 versus an expected 131.
Well, the fact that they're up $1 right now means I would go 50-50. They end up down. More than 50-50, they end up down.
I think I'd have to agree.
That initial,
a lot of times the initial move is a lot of times the wrong move.
Is usually wrong. And,
Lemming time. Ooh, they beat earnings. Buy it. Oh, wait, the earnings weren't that good. Sold.
I think I've said this before, but I can't recall. I mean, how many times, actually when I was very active out in market making in Intel, how many times I got the most ridiculous gamma scalps ever immediately after earnings, because there was just no one who had any clue. And his stock would often do this. It would go the wrong direction. And I would get things several handles away from where they should be trading, and it was amazing. I'm not encouraging everyone to go out there and just work crazy stub quotes. I actually had a reason I had gamma, but still, it was just this is not at all surprising to see that this thing taken out of the chin. And you're right, if it's
now up 20 cents from the close. So yeah, that one. I mean, what are they going to say? Ooh, Apple Pay. It's a new way for you to get scammed by hackers. I just think that it sounds like an interesting concept, but they're just the risk associated with that just seems high. But that's the part I think people are going to be listening for is, who's signed up for Apple Pay and who's on it and who's going to use it,
Yeah, that's clearly, of all the things they announced recently, has the most potential to be a huge kind of game changer for them If everyone starts using that, then they're essentially the big game in town from a payments perspective, and that's where the dollars
once people are. As soon as a company is like, ooh, it's our ecosystem that's going to save us, you worry. There's been one ecosystem that was able to get consistent sales, and it lasted for 15 years, and now that company's having to completely reinvent themselves.
We've seen it before.
And I'm talking about Microsoft, of course.
Yes, of course. Apparently, the love, or I should say, lack of love, not restricted to Apple right now. Also seeing Chipotle taking a little bit of heat. Apparently, no love for the tinfoil wrapped burritos. I mentioned they closed 653 today. Listeners, trading about 13 handles shy of that in the after hours right now, right around 640 or so. Let's dive in really quick to see where they went out. Well, that straddle went out at a whopping $50, actually about 52. So clearly, hopefully,
it's a resounding meh.
Yeah,
as I would say
that's not at all.
They have a huge Qdoba problem that they don't want to admit to, and until they do, that stock's going to be under pressure.
Yeah, they were the only game in town for a long time, and now you get to see it walking down here downtown Chicago. One corner Chipotle, the other corner Qdoba,
and Qdoba's better. It is, folks. and if you've been by a Qdoba, walk by at breakfast and get a breakfast burrito with chicken and queso sauce. It is a life-changing breakfast, especially if you've been out till 1:30 the night before.
Yes.
All right. Well, I can't comment on the breakfast. I have not had a Qdoba breakfast, but I have eaten way more burritos than anyone else on this show combined in my lifetime. And I got to say, for just the general burrito, I'm going with Chipotle over Qdoba.
All right.
I'm gonna have to side with Uncle Mike on this one. I've had my fair share of Chipotle, perhaps not as much. I was an early adoptee. They opened up one of their first stores right near where I lived on the north side there in Chicago back in the day, and I was early on the stock as well. And it's one of these things where it's just they had the niche unto themselves for a long time. And you're right now, Qdoba's starting to breathe down their neck, but still, yeah, I've always, at the end of the day, that steak burrito, a little bit better thing, I think, at Chipotle.
I will disagree all day.
I'm the steak burrito, man.
I'll disagree all day and every day. And to be honest, I've found that I'd rather go to like Taco Burrito King or one of the local places most of the time.
Oh, you like your salmonella direct, I see.
I really do. And they just do such a you know what it is that it's the hot lettuce that really does it, where they throw while it's on the grill, they throw the lettuce on there.
You're making me sick.
And then they give you the
hot lettuce. No, thank you.
It's awesome.
All right, while we're debating the relative merits of hot lettuce, listeners, we're going to move on to our final victim here. In the old odd block, we'll let Apple, and it's a stealth Apple, settle out a little bit. We're talking about one of Mr. Sebastian's favorite names of late. This is the iShares MSCI Brazil ETF. That, of course, EWZ is the ticker. Taking on a chin a little bit today. 43.41 closing at down about $1.70, or a little almost 4% on the day. And surprise, surprise, when we saw this going up and then taking it on the chin today, what caught our eye out here was a mega block. I should say actually two large blocks. A total of 10,000 of the OC 31, the OC weekly 40 puts. They expire on that 31st cycle. And of course, the OC 50 call going up 10,000 times for a net 55-cent debit. That was a total of 2 blocks, so roughly 5,000 or so each. Looking at the strikes now, a little more have piled on to the tune of about a little over 11,000 on the OC 40 puts and about 15,000 on the OC 50 call. So they could be doing some funky ratio. It could be other people piling in after the fact. Looks like we got the customer coming out here selling calls, buying puts. So this appears to be on the surface a fairly sizable collar going up out here in good old EWZ. Is that your take as well, Senor Sebastian? Think this is an underlying holder kind of collaring it up, or you think this is just a hardcore size outright spec?
Vol is screaming high in EWZ, and that's and VX EWZ, the VIX of Brazil, screaming high. They've got this election coming up, so everybody's watching that, and it's certainly a hedge.
There you go. 2 votes. I should say I vote for the hedge as well. But 2 votes there for the hedge. Uncle Mike will abstain. He's too busy watching the results. So we shall keep on rolling in his honor right on into the Uncle Mike block, a.k.a. the Strategery block.
It's time to dispense options wit, wisdom, and education. It's time for the Strategy Block.
All right, Uncle Mike, obviously a lot to analyze, a lot to digest. Apple off, it looks like just a bit now here. Kind of surprisingly unched for a day of post earnings. So there's a lot to digest there. Or do you perhaps have some other strategery up your sleeve, sir?
A little bit. Today, I just want to be a degenerate long premium advocate today. The first part of it, let's talk about Apple. One thing with which I was considering going into today was doing some type of a long back spread in some way. Obviously, right now, I am darn thankful I did not do such a thing. But nonetheless, I want to go through the benefits of long premium with which a lot of our listeners who are degenerate premium sellers, because whether you're a degenerate premium buyer or a degenerate premium seller in the world of the option block, you're degenerate either way, I've found through years of being associated with this show. So I want to make the case for the degenerate premium buyer today. As a premium buyer, I want to remind you of a couple things. The first thing is that you have rights. You have no obligations whatsoever if you are a long premium buyer. The only thing with which you have to worry about as a premium buyer is if your long call or long put is in the money on expiration. If it's in the money at expiration, then if it is in the money by a penny or greater, which means if it's in the money, then it'll be automatically exercised. So with that being the case, I want to emphasize that you have no obligations as a long premium buyer. The only thing you have to worry about is the amount of the trade itself. Now, let's talk about why that can be good. There can be issues to where you're assigned when you're not prepared for it if you are selling premium. Now, by selling premium, this can either be as a covered call, as a naked put, or as part of a spread. You have obligations if you are a premium writer. There is no escaping them. Now, with that, what could possibly go wrong? Well, a couple of things could go wrong. The main thing is an early assignment in some way, shape, or form. Now, initially, most of the time, if you are going to be assigned early on an option with which you have short premium, it's usually not an issue because of the fact that the person that exercised their option is giving up some type of a time premium in some way, shape, or form. You can simply close out the long or the short shares and move on with life. Maybe sell another call or another put, and everything is sunshine and rainbows. However, there's things with which you need to be aware of as a short premium seller. When doing so, let's say that there's a dividend in the stock. You could be on the hook for the dividend. So for example, let's say that I'm doing a call spread and my call is in the money and the person on the other side of the trade exercises the option. Well, when they exercise the option, if it's during a dividend phase or if it's at the point with which any person who sells the stock does not get the dividend, you're going to be short the stock during that time frame if it's at the wrong time, meaning you're on the hook for paying the dividend. So that's something with which you need to be aware of. Oftentimes this happens to people owning SPY spreads and their short call option gets assigned or the person on the other side of the trade exercises their option a couple days before expiration and they're not expecting it, but all of a sudden they're short all these shares. They're thinking, oh, okay, I can just close these shares. That idiot on the other side of the trade, he exercised his option early. Well, here's the problem. Your account's going to get debited for that dividend. Now, other issues can exist. Perhaps maybe you're short a call option and the stock's on the hard to borrow list. And because it's on the hard to borrow list, such as GoPro was recently, or still is, from my understanding, you might be charged a lot of interest for the privilege of being short the stock. It's pretty expensive right now. I read an article in the Wall Street Journal recently that if you want to be short GoPro, and this is just being short the stock, it comes close to 100% in annual interest charges for being short GoPro in and of itself. So with that being said, if you're doing maybe a 50 lot or 100 lot call spread and you get assigned on a short call, you could be in for a rude awakening for having to be short the calls. Now, that's a question for each individual broker in terms of how they handle that, but there are brokers out there with which you may need to have to have the cost of being short the stock passed on to you. So with that being said, if I'm just a pure degenerate premium buyer, none of that really affects me. So long as I'm out of my option before expiration, it really has no effect over me whatsoever. Now, of course, I pay the price for getting to live in such an oblivious lifestyle of not having to worry about such things. I have to pay this horrible, awful, evil, nasty, bad thing called time decay, theta. It is this horrible thing that every day the sun comes up, time decay is working against you. You have a lot of pressure against you. When is that stock going to move? It hasn't moved enough today. Should I get out of it today? It hasn't moved enough yet. Well, wait a second, now it's starting to run. But that time decay is working against me. Maybe I should sell a call. Well, no, I can't do that because if I do that, then I'm laying into a spread, and before the trade, I promised myself I wouldn't do that. You have all these agonizing thoughts going through your head. But remember, you don't have any of those obligations. There's a price to pay, but obligations do not exist when you are long a call or long a put. Now, with that, I want to talk about a trade with which I made recently. I've said on the show last week that I did get back into the S&P when it, last Thursday. And so I had gotten out of my 199 call on SPY, and I have explained this on the show several times before. And the reason why I got out was because had the S&P stayed the same or gone down, it would be a no-brainer. You're better off in cash than in a call if the market stays the same or goes down. But had it gone up, I had calculated that implied volatility would go lower, and getting back in at the point with which I had mentioned on the show, 202 on SPY, it wouldn't hurt so bad. Now, with the S&P going down lower, like it has, I did get back in on Thursday afternoon, shortly before the close, and I got back into the February 199 call. Now, you might say, but Mike, are you crazy? You're buying an out-of-the-money option. That's 100% time decay. What are you thinking? Well, I want to tell you what I'm thinking. Got out of that call option at $5.29. Got back into that same call option for $2.25. This is part of being a long-term bull on the S&P. So, with that being said, I have every bit of confidence that between now and February, should the market stay the same or go down, or not even go back to the 199 level, I'll have the ability to sell $2.25 worth of time decay. If not, then that's the risk with which I take. However, if the market does come back and go back to the levels with which it was, around the 2,000 level for the S&P, which I think could definitely happen, then this is a very good play in that it gives me the ability to have potential upside in the market while just taking on a smaller amount of risk. The thing I like about the current position with which I am in right now, just long call, I have no obligations. I don't have to worry about being assigned early. I don't have to worry about having the market go through my short strike prices. I don't have to worry about any of that because I have a small amount of money in the market. Now, for that, I paid the price. And the price with which I paid was I bought out of the money premium when volatility was high. Volatility has come down. I've been wrong on volatility. However, Delta has outweighed Vega to make this a profitable trade thus far. More to come on how this is working in the coming strategy blocks. But for now, back to you, Mr. Longo.
There you go, you degenerate premium buyer. You see, you need to justify yourself when you're so degenerate as you guys are on this show today. I wonder how many, if they had a lot of premium. I know the premium harvesting is big on the Idea Hub at OX. I wonder what percentage it really breaks down into in the premium selling versus premium buying. I'm wagering at least 75, if not 80 to 85% of the activity there. Premium harvesting. Maybe when we get Viceroy back on the show, we will dive into that. Speaking of diving into that, we don't have the Viceroy on the show, but we got a few more minutes here on the old program. So just to keep the OX spirit alive, and because it was so confusing and fun last time, I think we're going to dive into one more really quick trading patterns guessing game at the Xpress Block.
The Xpress Block, brought to you by Options Express by Charles Schwab. Options Express by Charles Schwab lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources. Options Express by Charles Schwab is the online broker for all traders. Best of all, Options Express by Charles Schwab lets you trade stocks, options, and futures all in a single account on powerful yet easy-use trading platforms. markets, including mobile devices. Visit optionsexpress.com for your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, listeners, welcome to the Express Block. The Viceroy is not here, but we shall carry on nobly and indeed ably in his stead. We had a lot of fun last week messing around with Apple, had some surprising answers for what people were trading. Of course, if you're not familiar with this, listeners, this is the trading patterns tool on the Options Express platform. You play around with it, it'll show you what traders on the OX platform are also trading that are trading a specific name. And I think today, in honor of the big fruit company coming out, we're going to play Apple again, mostly because I'm curious to see if some of those crazier names from last time are still in the top 10. Mark, you weren't here last week. I won't tell you what some of the surprising 1, 2, and 3 levels were. I'll just let you guess what you think your top 10, your top number one name is that's correlated to Apple underlying today.
Oil.
Great guess, Mark. Actually, you're right. That was one of the more surprising developments when we discovered this last week, that the number 1, number 2, and number 3 spots in the top 10 for Apple were all NYMEX crude oil futures. And the trend holds true today, even on an earnings day for Apple, with the number 1 spot going to the DEES crude future and the number 2 spot to the JAN crude future. So there you go. Number 1 and number 2, Mr. Sebastian. Well done. Uncle Mike, let's see if you can redeem yourself. I believe you were shut out last time, if I'm not mistaken. So let's see if you can redeem yourself this time.
Oh, I did horrible last time. It was embarrassing. I'm going to go with CMG.
A good choice. The stealth Apple, some might say, some clever pundits might say, but not on the top 10 today, Uncle Mike. So far, once again, a swing and a miss. Mr. Sebastian, let's see if you can go 3 for 2, really, because you got 2 last time.
IBM.
A good guess as well. Also not on the list. Uncle Mike, back to you, sir.
All right. Well, that IBM actually would have been my next guess, so now I'll go with Facebook.
Always a safe bet when you're talking Apple to throw one of those crazy heavy retail names in. Facebook, number 7, surprisingly low on the chart today. But there you go, Uncle Mike. At least you're
the top 10.
You're on the board finally. So there you go. You're playing the home game, listeners. Uncle Mike finally has a point. You can take a drink. Mr. Sebastian, let's see if you can clean it out here.
What about gold? I saw that was moving around a bunch today.
Surprisingly, no GLD, no metals really of any kind here on the list. An opening has opened for you, Uncle Mike. Can you seize it?
Oh, my goodness. I don't know. I'll say, let's see. GoPro?
Well done, sir. Number 4. You're climbing the ranks. Woo-hoo! So now that's 2 for Sebastian, 2 for you. It's number 4. Number 1, number 2, the crude. Number 4, GoPro. Number 7, Facebook. That's what we have so far. Mr. Sebastian, can you take the lead? Google. Also a fairly good bet when you're talking Apple, and yet no, not on the list today at all. Uncle Mike, the floor is yours. Take it. Can you run with it?
This is a lot of pressure now.
Think crazy hyped names.
Okay, well that takes away the SHY that I was gonna guess. So let's see.
I'm doing you a favor here, sir.
Crazy hyped names. Let's see. Good crazy.
I couldn't bear to have you pitch another shutout like last week. I felt bad for you.
Well, I'll go. I don't know if it's going to be there or not, but I got to go with one that I like right now for this game. 3D Systems, Triple D.
No, not hyped enough. Mr. Sebastian, Uncle Mike swings and misses. The ball is to you, sir. Can you respond?
Well, I'm debating whether I go the Ebola route. Or whether I go with something like an Alibaba.
I don't know if we're going that dark. I'll give you that clue. Not that dark. No Ebola premium on this list that I could see.
Yeah. So I was thinking something like an Alibaba makes some sense.
Yes, there you go. Number 3, Alibaba. So number 1 and 2, the crude. Sebastian claiming the top 3 spots. Number 3, Alibaba. Number 4, GoPro. Number 7, Facebook. Got time for one more guess for each of you. Mr. Uncle Mike Tosaw, you're slipping away here. You had a good opening salvo there, and it's kind of falling apart. So redeem yourself,
just going
sir.
Nowhere, and I'm going nowhere fast. I'm going to go with Delta Airlines. I'm going a little bit out there on this one.
That's your idea of a hyped stock, huh? Wow. You do live in a very
I thought you
quiet.
already had the hyped stocks.
You do live in a very quiet section of the world. All right. No, Delta Airlines is not a very hyped stock. Mr. Sebastian, the floor is yours. Can you clean it up here?
Yeah, you know who's got earnings this week that I think a lot of people are probably trading is there's a certain stock that that was originally a online bookstore, but has become much more than that. That retail traders love to play around with. Called Amazon.
It's called Barnes & Noble. Yes, I know. It's a very, very hot, hyped one. No, Barnes & Noble and Amazon, both surprisingly not making the list. I can see where you're going there. I give you a little bit more credit for that one than perhaps Delta Airlines. You guys missed the most hyped name of all. You got number 1, number 2, The Crude, number 3, Alibaba, number 4, GoPro, all very hyped. Number 5, of course.
Gilead.
Number 5, of course, Tesla. Of course. The most hype, most nonsense name of all. Or perhaps the second coming, depending on where you sit. Number 6, the E-mini NASDAQ future, DEES expiration. Number 7, Facebook. Number 8, the old Twitter, yet another much hyped name.
Oh, gosh.
Number 9, SPY, kind of a pretty much a base hit. You can always guess SPY, and usually it lands somewhere on one of these lists. And number 10, one of your favorites, Mr. Sebastian, UVXY.
UVXY. They should call this list. You know, the what do Apple traders trade like reads like a bunch of lemmings jumping off a cliff. It's that bad.
The crude oil futures show some hope there that there is some sophistication there.
The NASDAQ E-minis maybe, but that is talk about a bunch of lemmings. UVXY, you look at their price behavior. They're buying calls on UVXY.
We can investigate that.
There.
We can investigate that actually. If you give me
no way to lose there buying calls on UVXY.
You give me
that'll be a really effective trade for you.
One quick second. Let me just pull up the option patterns tools, and then we can see exactly what the people were trading on the old. Surprise! We had some questions about this last time of what this actually indicated. So bear that in mind. Take this with a little bit of grain of salt. But the number one trade, according to the trading patterns tool here for options patterns on the OX platform today for UVXY, was the Jan 2015 35 put, doing about 500 of those on the OX platform today. So
interesting.
That is not what I expected. And the rest are pretty much all calls.
Well, this was, yeah, there you go. Congratulations.
And the OC weekly 80s, 80s, 90s? Jeez. What? That's crazy, Tom.
Yeah,
I don't know
that's not a smart trade.
I don't know. 200 of those went up today. That is.
What are you people thinking?
That is frightening. UVXY, if you're not following it, listeners, trading $35. If there's a weekly 80 going up, I hope to God that's closing.
You know,
for
Mark, you know what I'm going to do, Mark? I'm going to get this list on a daily basis, and I'm just going to start putting offers out against all these guys trading this junk.
There you go. Come on the OX show and say you're fading.
We need to rename that the Lemming list.
You're fading all of their clients. You might be getting a call from Schwab Compliance on that one, sir. All right, and with that, of course, listeners, you can play this game at home as well. Surf on over to optionsexpress.com. Click on, if you're a client, of course, you got to be a client to get this one. Click on the toolbox, then click on the trader tools, and you'll see their idea tools, actually, and you see trading patterns in there. It's really cool. You'll find, I'm always doing this just to find some very bizarre correlations that I never even expected existed, like the crude so heavily with Apple. That's kind of interesting that it persisted, not just, it wasn't a one-off thing last week. It's still persisting, even going into Apple earnings, which is really interesting. Speaking of Apple earnings, let's round it out here by diving right into the Around the Block segment.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, and what we're watching right now, listeners, of course, are still the big earnings. Uncle Mike, correct me if I'm wrong, is this perhaps the most unched we've ever seen Apple immediately after an earnings announcement, at least in recent memory?
This is very boring. This is unbelievable.
It's my technical term, like that, most unched.
It is.
Well, tell us what else you're watching aside from this essentially grass growing out here in Apple today.
I don't know what to watch now. I was all excited, got the popcorn ready, the smoking jacket, was all excited to see the Apple go up and down, and it's disappointing me. I mean, it's going up, which is good for the clients, but I was hoping it would go all over the place now. I'm watching to see if the S&P can continue its comeback as to what it's been doing. We might come down a little bit, but nonetheless, I'm just watching the market in general. In terms of the bonds, we are pretty close to some highs right now, so I just want to honor Alex by actually speaking of bonds, with that, we still have a little bit. We have a ways to go yet. I shouldn't say we're near highs. We still have about $5 to go in TLT. But just curious to see where the bonds go, along with the dollar and gold, and just seeing how it all correlates.
There you go, taking the macro seat for Mr. Viceroy today. Mr. Sebastian, what else is catching your eye aside from the big earnings going on tonight?
Yeah, I mean, I'll be interested to see where VIX goes, and that should really keep everything up to speed. Just kind of VIX, and what does the market do? That's kind of my general feel for things.
All those people chasing that Apple straddle can't be loving life right now. They were bidding that thing up hard going into the close, and just a most resounding of mez for a minute.
That was the mayest meh I've ever met.
This is like Microsoft of like 2 years ago type earnings, where it just does nothing. I've yet to see Apple really. Maybe this is the new Apple post split. We just get a lot of these now. I don't know, but maybe it's a structural thing. I don't know, but still, that's very surprising to think to all of us here on the show. Of course, Chipotle, the stealth Apple, doing a little bit more to the downside, moving still about 14 handles or so to the downside. So people not liking the prospects for tinfoil burritos anytime soon. Of course, we do have Amazon looming on the horizon, the 23rd after the close. And then, of course, we have some other names coming down the pike as well. Ford, another one we like to watch here on the old show for all those in the old manufacturing. IBM, of course, taking on the chin today. And then, of course, I just mentioned them, so you might as well, once you invoke them, you have to talk about them as well. Of course, we have Microsoft coming up. Maybe they're switching places with Apple a little bit now. They're starting to do a little bit of stuff coming out of earnings for the first time in a long time. Maybe they're transitioning, Apple moving into the old Microsoft period, Microsoft moving into the new vibrant Apple period. Who knows? Never thought I'd say that, but at least from a stock perspective, it might seem to be the case. All right, that is going to do it for the Around the Block segment. It's also going to do it for this episode of the Option Block. But as always, before we go, let's check in with each of our cohorts here on the old All-Star panel, see what they have cooking that may interest you. Starting off with you, Mr. Greasy Meatball, a.k.a. what do we call you at the top of the show? Oh, yes, Prussian General Sebastian. What is cooking in the land of the pit?
On Thursday, we're doing a free webinar on using options to trade for direction. Go to www.optionpit.com/events. Get yourself signed up, and you will be a happy camper.
So that's all about row then?
It's tons of row, tons of fourth derivative VOMA.
Serious deep stuff. I'm looking forward to that big row. I think row webinar will be huge. Give it like 2 or 3 years.
Oh yeah,
it'll be all over that.
You know what? There will come a time where I will actually get to do one of those because rates will actually exist.
Rates will happen again, and you may actually do one. That might be an interesting time. That'll be a new era, of course, when the row webinar comes out and people actually click on the link to register.
Exactly.
Perhaps a scarier time awaits us. Uncle Mike, take us home, sir. What is cooking in the land of RCM Wealth Advisors?
We're out for blood, and this is what I mean by that. Yesterday was the 3rd anniversary of my stillborn daughter, and for those of you that have listened to the show that much, I got a ton of outpouring of prayers and support, and my wife's alive today. And she's alive. My wife almost died as well during this whole ordeal, for those of you that don't remember. But with that, she received 16 units of blood. And because of that, she's alive. So what I am asking all of our listeners to do, go somewhere, give blood, and send me an email. Tell me your story. I'd love to hear it. And there's plenty of great places to give blood throughout the country, but go do it. It's a very worthy cause, and my wife's alive today because of it. My email is mtosaw@rcmam.com. Give blood, send me an email. I'd love to hear your story.
A noble cause. Hard to believe. That was 3 years ago, sir. It seems like it was much more recent than. I shall do my effort. I will go out and give some blood in your honor as well. A good cause to support, no matter what the time of year is. I can stand to shed a few pints. What do you think, Uncle Mike?
Go for it. Much obliged.
maybe a quarter or two.
Blood, but they said I had some weird autoimmune deficiency syndrome. I don't know what that means, but they wouldn't let me do it.
All right. On that horrible note, it was ending on a hopeful note, and then the Prussian general came in, the greasy meatball. Quite literally, he's merited that name again now. Came in and just twisted it all to hell. So with that, listeners, we're going to wrap it up. On behalf of Uncle Mike and the greasy meatball and the Viceroy, who should be rejoining us soon, and of course myself. I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show. And of course, for sending in such great questions. We'll get to them on Thursday, and we'll see you next time right here on the Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.